Today, we're going to explore the concept of scarcity, which might just change the way you think about money forever. We're putting three heavyweights in the ring: the US dollar, Bitcoin, and gold. But here's the twist. We're grading them on something you might not expect: scarcity. Why? Well, scarcity is a key factor in determining value. The rarer something is, the more valuable it tends to be. Let's start with the US dollar, the world's reserve currency. Now, you might be wondering, how can we measure the scarcity of something that's printed all the time? And that's exactly the point. The US dollar, like all fiat currencies, has no inherent limit to its supply. The Federal Reserve can theoretically print as many dollars as it wants. In fact, since the abandonment of the gold standard in 1971,
Who needs this gold stuff anyways?
the money supply has increased dramatically. The thing is, this ability to create money out of thin air comes at a cost. It's called inflation. As more dollars flood the market, each individual dollar becomes less valuable. It's like diluting a drink. The more water you add, the weaker it gets. This is why a dollar today buys you far less than it did 50 years ago. Now, let's turn to Bitcoin, the new kid on the block. Bitcoin was created in 2009 with a very specific feature baked into its code: scarcity. Unlike the US dollar, there will only ever be 21 million Bitcoins. That's it. No more can be created once we hit that limit. It's like digital gold, but even more precisely limited. But it gets even more interesting. The rate at which new Bitcoins are created halves every 4 years, in an event called the halving. This means that over time, it becomes increasingly difficult to mine new Bitcoins. Right now, about 19 million Bitcoins have been mined, leaving only 2 million left to go. From a scarcity standpoint, Bitcoin is in a league of its own. It's not just scarce. Its scarcity is programmed and predictable. Finally, we come to gold, the OG of scarce assets. Humans have valued gold for thousands of years, and for good reason. It's rare, it's durable, and it's not easy to find or extract. Unlike the dollar, we can't just print more gold. And unlike Bitcoin, its supply isn't absolutely fixed, but it is limited by nature. This natural scarcity has made gold a stable store of value for millennia. It's no wonder central banks around the world still hold vast reserves of gold. So, how do our contenders stack up? If we're grading on scarcity alone, Bitcoin takes the gold medal with its fixed supply and programmed scarcity. Gold comes in a close second, with its natural scarcity and thousands of years of proven value. The US dollar, unfortunately, comes in last due to its potentially infinite supply.
Print me.
But remember, scarcity is just one factor in determining value. Each of these assets has its own unique properties and use cases. The key is understanding these differences and how they might affect your financial future. So, next time you're thinking about money, remember, not all currencies are created equal when it comes to scarcity.